January 1st here on South Central, we have kept the spotlight on South India's office space market, given that data has Bengaluru, Hyderabad and Chennai leading the way in office space transactions for the July-September quarter. In fact, the latest data by Knight Frank has also revealed that Global Capability Centers, or GCCs, were the primary growth drivers in Hyderabad and Chennai, accounting for 45% to 51% of all transaction volumes in these cities. So are GCCs the golden bullet for South India's office space market? And what is the growth outlook like here? To speak to us about all this and more, I am now joined by Rishi Das, co-founder of indiqube. Rishi, firstly, thanks so much for joining us here on the broadcast. I can't help but reflect on how the timing for GCCs in India and South India, of course, seems almost perfect. First, the tighter H-1B visa norms, and then a push for a GCC policy in the context of this climate like Maharashtra has done. But given that you're seeing a bulk of these investments come into the South Indian office markets, especially in Hyderabad and Chennai, and even Bangalore for that matter, what exactly is it in these parts that is pushing investment here, Rishi?
Yeah, thank you, Jude, first of all, for giving us the opportunity to be here. So if you look at the commercial real estate office space in India, it's typically now crossed a billion square feet of office space. And South contributes almost, you can say more than 50, to be precise, almost 52% of this is basically the office space, total office space stock in India is coming from South. So that's the first factor to look at. So South definitely has a huge momentum going for it. The South has the scale, and South also has a advantage of head start. If you look at the whole thing started with Bangalore and then Hyderabad and all of that. So as a natural evolution, the quality of talent that is there and the companies which started as offshore development centers here, they all have scaled up, evolved. That has worked to the advantage. The other factor is there is a lot of fungibility within the southern states. If people have to move from Hyderabad to Bangalore, vis-a-vis moving from, say, Delhi to Bangalore, I think there is a lot of much more portability of talent within the three cities, the big cities over there. So that's a big advantage. And then there is a very healthy competition among the southern states when it comes to attracting the new GCCs and companies and all of that. Plus, if you look at the gender diversity, the literacy levels, the quality of education and all of that, I think, and then the number of tier 2 cities, if you see in South India with Coimbatore leading the pack, followed by a couple of cities in Kerala and all that. And then you just mentioned in your news a while ago about Andhra, like the big data center coming up there. So I think those are the factors where we see that a large part of momentum is built up for South, and that's where you see a very substantial part of the GCCs that are coming to India are growing in South India.
No, absolutely, Rishi. In fact, like you said, the southern triangle, Hyderabad, Bengaluru and Chennai, in relatively close proximity is no doubt a key determinant of this investment, including, of course, the fact that you're seeing a lot more indicators like gender diversity and so on as far as South India is concerned. But it isn't just South India. In fact, GCCs have also made their presence felt pan-India, accounting for a third of all office space transactions, according to Knight Frank. So what is the growth outlook figure like for this segment, both for the overall office space market, India and the South?
Yeah. So if you have to quote, you mentioned about the Knight Frank report, if you see the year-on-year movement, about 24% more space has been absorbed compared to last year, which is a very, very substantial uptake, considering that we already were talking about large base last year. And then if you look at more specifically the GCCs, about 7 to 8% growth in GCCs is happening continuously. And so we definitely see that going forward, there will be a healthy uptake. Maybe this 33% that we talked about, a third, I definitely see this going up, maybe by say 5-6 percentage points higher. So we definitely see that this number could be around 40% next year of the total new real estate that gets added in India, from one third today.
That growth number keeps going up, doesn't it? There's also a rub-off effect, interestingly, Rishi, as well, that we've begun seeing in terms of the big GCC push in South India. For instance, you at indiqube, in the co-working segment, are also seeing GCCs account for 44% of your client base.
Yes.
Is this share likely to grow for you in the medium term?
So I think, let me talk from our industry point of view, what is working. So if you look at the GCC is not just a Fortune 100 phenomena. Today, if you look at typically Fortune 2000 companies, a lot of unicorns in the Bay Area, irrespective of the nationality. A lot of those kind of companies are coming to India. That is one thing which is going well for us. Second thing is that it's an evolution. Any GCC will start with say 50, 100 people, and then over a period of time scale up over there. And third factor is today the reality is people jobs are going where people are. Like if you see somebody like me came from Lucknow 2000 miles to work in Bangalore, but today that's not the case. Jobs are going where people are. So I think if you look at all these three factors combined, then GCCs which are in the early stage of evolution or which are not very large, like a Fortune 100, typically they tend to look for managed office spaces or the flex office spaces as we call it over there. And so anything less than 2,000 seats becomes a sweet spot for companies in our industry. And that's where we see that very large growth is happening over there. And the other factor is that GCCs by nature prefer grade A office spaces. So, for example, suppose you want to go to a large tech park and you say, I want 500 seats. The large tech parks, most of them are operated by REITs today. They are more excited about working with many much
Right,
larger size companies. And that is where, if you see, there is a paradox. A
right,
smaller
right.
company doesn't fit into their business model. So naturally, those companies are looking at flex guys to get good quality spaces. Flex guys also want a lot of flexibility, and they want a plug and play kind of a
Absolutely.
setup. So keeping all this in mind is where we are
Absolutely.
seeing
Yeah.
that yeah, that's happening. Yeah.
True. So what do you think will become of vacancy levels, in both in flexi, co-working spaces, indiqube, of course, is one of them, in the overall co-working space industry by way of continuing GCC investments?
So we have been having, Jude, very healthy occupancy levels. If you look at as a company, we typically have been operating around 85, 86% occupancy levels. And definitely like the GCC, that growth and all that is helping us. And since we are a fast growing company, we definitely do not want to breach the 90% occupancy levels because we want to have a lot of headroom for growth. So I think the occupancy levels in our industry and in particular with IndiQube will hover around 85, 86% kind of a number in basically a year's time.
Right. But Rishi, I'm tempted to ask you how sustainable these GCC investments are in the first place. While we in India tend to wax eloquent about these investments, the pace and the volume of these investments, especially given the pedigree of the global names at the center of these of this GCC money that's coming in, there's also a perspective these companies themselves are looking at the centers as yet another back office. In fact, often referring to them overseas as their teams in India or their teams in Bangalore or Hyderabad. So do you feel that there's a risk of a GCC bubble that might end up popping soon?
So, Jude, I can say that it is not at all a bubble. It's an evolution. And if we notice, typically a decade back, we used to refer to this global centers as ODCs, offshore development centers, back office kind of centers. That's how we used to refer to them. Now, and at that point of time, if you see the primary, you can say sponsor for sending work to India used to be the CTO or the CIO. Now, today you look at today the chief marketing officer is sending work here in India. The CFO organization is sending work. The HR organization is sending work. So today the amount of work that is coming to India is a lot more broad based in terms of functionality, in terms of complexity. And today most of the GCCs are
Right.
acting like co-located centers. The other fact I will say is that if I look at a
Right.
decade back in 1,000 people company GCC, you will see two, three global roles. Today you see more than a dozen roles, which are
Right.
global roles, which people are playing out of India.
Absolutely.
So I think, and the other fact is, it was more of a North America phenomena, if you see. But now we are seeing a lot of European countries, basically Scandinavian countries, or you look at East Asian countries, lots of work is coming over here. So today, the nature of work, the nature of GCCs is very, very diverse. Typically, right from manufacturing to fintech to you name the sector or logistics, you have work coming to India. So definitely, this is a natural evolution, and I don't see there is any bubble, to be honest, building up over there.
Right. quick last word then before I let you go. Maharashtra has formalized its GCC policy, and if we're to see other states in the south do it as well, what are the key bottlenecks that you think will need easing out?
So if I look at the GCC promotion policies, most of the states are talking about like the tier 2 and tier 3 cities, that they want to move a lot of jobs there. As I said, that jobs are going where people are. Now, today as indiqube, we are present in 7 to 8 tier 2 cities. And I can tell you it's a chicken and egg problem in these cities. There is hardly good quality buildings, a grade A infrastructure available in these cities. So that is a huge problem that most of the companies are facing. And think about it, like 20, 25 years back, the government of Tamil Nadu set up Tidal Park, or the government of Karnataka set up the ITPL in Whitefield. Now those kind of basically public-private projects have to come into tier 2 cities before we can expect a lot of private sector to have the confidence to set up centers. And today you look at the rentals in a lot of these tier 2 cities, they are almost at par with what you will find on the periphery of Bangalore. So definitely the cost of living is less, but the real estate costs are not low in those cities. So I think, and then the whole attitude, when you talk to with different departments in Chennai and you go to Coimbatore, you see a sea difference in the attitude of the government officials. The learning curve is still not there. So I think those are the places where I believe that the governments of the day will have to look at setting up mini tidal parks or mini ITPLs over there, and bringing a lot of single window and back it up with incentives over there. So that's how I see that the GCC story. And then now we are seeing that a lot of GCCs are, a lot of governments are setting up not thematic setup, like healthcare, for example, if you look at, or fintech. Those are the kind of places where we are seeing more theme-based investments and clusters are being set up across different states. Yeah.
Right. Right. Well, there's a whole lot to do and a lot of leverage that the South can totally get onto. On that note, Rishi, thank you so much for joining us and breaking down those insights for us on South India's GCC potential.
Thank you, Jude. Yeah,
right, moving on. It's a first-of-its-kind cinema viewing experience for Indian film goers, and it's just made its debut in Bengaluru. PVR Inox has launched India's first dine-in cinema in the city. Located at the M5 E-City Mall, the innovation lets film goers order food and have an end-to-end dining experience, all while watching their favorite releases. The new screens come with an Onyx LED cinema experience, lounge-like revolving seats, dimly lit shows, and a gourmet menu with a live kitchen. Earlier today, I spoke to Amir Bijli, lead director of marketing at PVR Inox, about the innovation and what else is in the PVR Inox pipeline. Here's a slice of that conversation.
We're extremely excited. It's a momentous day for us. It marks the launch of our newest innovation, which is the dine-in cinema in M5 in Electronic City in Bangalore. We're extremely excited. Yeah.
Right. So let's move to the details now. What exactly is the pricing strategy that we're looking at? Do tickets at the dine-in cinema get priced at a premium versus other cinemas? Do patrons pay separately for the food? Break this down for us, if you will, Amir.
Of course. So just to give you a little background about the cinema itself, this is our ongoing efforts to ensure that innovation is something that is at the forefront of our thought process. This is the first of its kind cinema within the Indian cinema industry completely. We'd aim to create a holistic approach where definitely we maintain the traditional sound and immersion of the screen within the cinema watching experience, but also add that little bit of extra kick with a gourmet dining experience. We really want to double down on the idea of a shared reality, where you are not only sharing the experience on the screen, but everything that is on your plate, from conversation to culinary service. I think in terms of pricing, the question that you asked, we're pricing it slightly differently, where we are talking more about the tables as a whole rather than the individual seats. So the tables will be sold in tables of 2 and tables of 4. This is the most common denominator of patrons that come into our cinemas in groups of 2 and 4. And for the starting price of a table of 2 would be between around 250 rupees for a table of 2, growing up, graduating to eventually 850 to 900 rupees for a table of 4.
Right.
This will just be the price. Yes.
And the price of the ticket, I'm assuming, will then be separate. Is that how you plan to go about pricing this?
This is the price of the ticket. This will be the price. It'll be a price of a table instead of individual tickets. And then F&B will be on top of that. We do have a lot of offers that we'll be running anyway, but the gourmet dining experience will be in addition to the ticket price. Or the table price, rather.
Right. And what was the thought process behind debuting the Dine-In cinema in Bangalore, Amir? And what's that roadmap like? How many more PVR Inox screens are being planned for, keeping in the dining concept in mind, and by when?
So the roadmap was, again, we always must drive ourselves to innovate and experiment with new formats. And the South, mainly Bangalore, is such a ripe platform for such experimentation, because there are it's that perfect combination of avid food lovers and extremely dedicated religious film watchers. So we thought, why not combine the two, essentially. And the developers that we work with here were extremely accommodating to allow us to experiment in such a property. In addition to the dine-in, we also have our first kids innovative format, which is a new experiential format for children to play and for parents to enjoy as well. So luckily, we were all able to make it work within this cinema. The plan, once proof of concept is achieved, to be more and more aggressive with this concept. Hopefully within the next 6 to 8 months, you see another dine-in, hopefully in Chennai, hopefully in Mumbai, and a lot of the other metro cities.
Right, but no number in terms of a roadmap pan-India, how many you want to by the end of a year?
By the end of next year, I'd say realistic assumption is about 4, including this one.
Right, interesting then. Now,
Yes.
I know for a fact that South India has often been fertile ground for you at PVR Inox to experiment with formats, experiences, and innovations like you just mentioned. What else is in the pipeline as far as this market is concerned?
So, like we said, we just inaugurated the new Kiddles format as well. That's there. We're experimenting with gaming as well. So the beauty of a dine-in auditorium is the LED and the Onyx screen. So the Onyx allows you partnered with Samsung, it allows you the capability to program much more than film on it with complete ease. So the refresh rate is accommodating for gaming, for live experiences, broadcasting becomes much, much easier, and live concerts, programming comedy, all of that really makes it quite seamless as well. So in addition to providing these boxes, we'll also be providing the capability to program much more than the film watching experience. Yeah, definitely. So LEDs are something that we're really looking forward to, in addition to expanding the normal IMAX formats, because we're still not as well indexed as we'd like to be in the South with IMAX, and 4DX and ICE and things like that.
Right. You're also heading into a promising release season. There's Avatar, The Last
We are.
Airbender on the cards. Now You See Me 3 as well. Many more titles lined up for release, especially with the festive season as well, just around the corner. In fact, already having just started with Dussehra. So what's the occupancy growth that you foresee or project for the season?
For the coming festive season, extremely healthy occupancies, around 40 to 42% is what we have on average, given the wide array of films that you've just mentioned. There's something for everyone, so that's roughly the percentage that we're expecting for this coming month, for the festive season.
Right. And going forward, what's the one big innovation that you are the most excited about at PVR Inox? What's on the cards and what's exciting you the most?
Wow, there's a lot. I think it's the idea that we're making cinema more experiential beyond the traditional movie watching experience. We're making sure that the foyer is extremely more experiential with gaming, with added F&B options. I think we're at a stage in our, in the majority of the company where we are competing with the timeshare of much more than just, someone choosing an alternate cinema option. It's the time value of anything. It's people choosing to play sports, people choosing to stay at home for different reasons, go out. So we have to make the cinema much, much more prepared and accommodating for all requirements and necessities. So coming months, you'll see a lot of emphasis on gaming, a lot of emphasis on dining, more artistic exhibit formats as well as more innovations like the dine-in.
Well, you know what to do the next time you're in Bangalore, have hunger pangs and want to watch a movie at the same time. Well, from cinema innovation to big tech now, global tech giant Google is set to invest $10 billion to build a 1 gigawatt data center cluster in Visakhapatnam, marking the tech giant's first major data center investment in India. This, of course, is according to reports. In fact, the agreement between Google and Andhra Pradesh is expected to be finalized on October 14th in New Delhi in a meeting between top executives of Google and the state's IT and Electronics Minister Nara Lokesh. The project will span 3 campuses at Adavivaram and Tarluvada villages in Visakhapatnam district and Rambili in Anakapalli. It will turn operational by July 2028. For the third straight day now, the Kerala Assembly was rocked by protests as members of the opposition shouted slogans and criticized the ruling LDF over allegations of theft at the Sabarimala temple. The opposition has demanded the resignation of Devaswam Minister V.N. Vasan, who has been at the eye of the storm, along with the Travancore Devaswam board over an alleged mismatch in the weight of gold plates within the temple itself. Breaking his silence for the first time, Kerala Chief Minister Pinarayi Vijayan has said the state is ready to take action without favour, regardless of whoever is at fault. The state, remember, has said it is open to discussing the controversy and has even appointed a special investigating team to probe the alleged theft. In fact, speaking about the incident, of course, was Rajiv Chandrasekharan, former Union Minister, speaking about this alleged theft at the Sabarimala temple. Let's listen in.
Look, it is becoming more and more obvious as the skeletons are coming out, tumbling out of the CPM government's closets, that over the last 10 years, the CPM has presided over a reign of corruption that has not even hesitated to go in and steal from temples. And as you know, you have heard about the sacred temple of Sabarimala and how large amounts of gold are missing from there. And how today there's a report that in some temples and even in Calicut, in Kozhikode, there is gold missing.
From Kerala to Karnataka now, Karnataka's social and educational survey, or the caste census, is being extended to October 24th. The survey was originally scheduled to be completed by the 7th of October but ran into logistic delays. The extension now means government and government-aided schools in Bengaluru will function only for half a day between 8 a.m. and 1 p.m. till the 24th. Teachers at these schools will be pressed into enumeration duty after school hours. Schools in the rest of the state will see curtailment in academic hours up until the 12th of October. Right, with that, we're completely out of time on this edition of South Central, but we'll be back tomorrow, same place, same time. But for the moment, it's goodbye from us.